And for everybody who doesn't know, Tony, you probably know him by now. Tony Arterburn of Wise Wolf, and he has set up davidknight.gold that will take you to his website, take you also to where you can find out about and sign up for Wolfpack. Wolfpack is something that's very innovative that Tony did, which allows you to buy gold or silver on a regular basis. You can set up your budget and you can sign up for a particular level. If you want $50, if you want $1,000 or whatever, you can set that up each month, and you'll gradually accumulate this to average out your prices rather than saving everything up and making one big purchase at one point, because the price is fluctuating all the time. But that's a great way to start to accumulate gold and silver. Thank you for joining us, Tony.
Great to be with you, David. Good to see you.
We're looking at this. I want to get your take on this. We saw gold go up about 2.8%. I think the spot price went up yesterday, but a lot of people are saying, well, it went up because of the rumors, which apparently I don't know anybody to believe any of these rumors. The rumors are designed for insider trading. I don't think they're actually reflective of anything that's actually real out there. But nevertheless, it does move the markets, and it certainly does. And the markets move, and the price of gold moves. And what moved it, they said, was the fact that they thought that if there was going to be peace, and that would be deflationary. And so that helped gold to go up, which is kind of counterintuitive, the way I look at it. I mean, what do you think in terms of, you look at this stuff and you have to kind of make a guess as to what the short-term movements of gold are going to be. Most of us who are investing in gold, we're looking at this for the long term. And yet, if you look at this, what do you think if they actually came up with some kind of a peace agreement and stopped all this stuff? What do you think, and the price of oil starts to go down, would happen with gold? I mean, gold went up when oil went down, and vice versa. What do you think in terms of what we might be seeing with this, how that might affect gold?
Yeah, oil's down about $8 a barrel from yesterday when I checked, and I think it's a natural flow back and forth from where we are. And we saw at the beginning of the war, gold went to about 5,300 an ounce, and then started to trend downward because, as we've discussed, large entities, countries, central banks dumped a lot of their gold holdings to purchase oil. And a lot of the entities used so gold functioned as money at that point, and they were able to use that liquidity in order to buy crude oil. I think this is going to be a yo-yo back and forth, but I don't think we're going to go back to like the days of $50 a barrel oil anytime soon. I don't know that that's even on the horizon. As a matter of fact, I think this is a preparation for energy lockdowns to stifle growth and to stifle travel. And we've seen the airlines that have imploded because of this, and JetBlue's next on the chopping block after Spirit. I think it's just the ball's just getting started to roll.
Oh, yeah. And it's not just them. Lufthansa had to cancel 1,000 flights for the summer. Yeah.
It's just getting started. And the shock of this, I don't even think has really set in from when oil went to 120. I mean, a lot of that stuff is still not. I was on a show yesterday. They asked, because I've been in the gasoline business since I was a little kid with my family. I understand a little bit about it. And I said, well, there's a lot of lag time between pricing and refinement that happens as well. So, and there's no certainty in this market. So, I mean, you could have temporary gains in gold and temporary gains in oil, and they might go back and forth for a long time. But the trends are all the fundamentals that you and I discussed. The trends are all in there to show that the dollar is constantly being, reprinted, expanded. The money supply expands, which decreases the purchasing power, and that happens to all the currencies in the world right now. So, in the long run, I think the outlook's really good for metals, and honestly for crude oil as well. Even if demand goes down with higher prices, I still think that the price of crude will be higher.
It's the kind of thing where we've had a couple of these memes out there. Trump always chickens out. They put that out there about the tariffs because of the volatility and the capriciousness about Trump in terms of tariffs. Then they came up with another one, Nacho, not a chance that Hormuz opens. And all that is there, I think, to try to calm down the market, because they do react, just as we saw. This person who put in that nearly $1 billion bet at 3 a.m. in the morning, 1 hour before the story hit, that Trump claimed that, or somebody in the Trump administration claimed that there was going to be a one-page memo of understanding to end all this nonsense with Iran. And that person made about $125 million in that 1 hour. And so people are playing this, and I think we're being played by the Trump administration. But, there's going to be this kind of volatility, this jumpiness. There are people who are manipulating other people with this, and they're reacting to things that Trump says as if there was any credibility to that at all. And that's what's really moving around the price of oil and the price of gold and all the rest of this stuff. And we look at the long-term effects of this. And I don't know if you heard it or not, Tony, but I talked earlier this week. There was an opportunity to reflect on Jeopardy, the game, the TV game. And they talked about some guy who just finished a run of 31 or 32 victories on Jeopardy. And he made $880,000, I think it was. And how much did the very first winner make? She made $345. And that was back in 1964. And she said, yeah, there was a lot more purchasing power back then. A friend of mine and I went to a bunch of Broadway shows and everything. I thought, they mentioned in it, they said, well, that would be worth about $3,000 something today. And I thought, well, what would have happened if she, instead of keeping the currency, what if she had taken that $345 and bought gold at that point in time, because it was fixed at $35 an ounce. Even the market price was like $35.50 an ounce. So it was still, kind of a stable economy in 1964. And it turns out that she would have had $45,000 worth of gold if she had converted that $345 in cash, because that's the long-term effect. And that's the way you got to look at this, not get caught up in all of the rumors and reactions that are happening on Wall Street, and how the people are deliberately trying to manipulate things. I mean, Trump and his regime is a good example of how the market is manipulated with rumors, isn't it?
No. Well, at this point, is there any other trade but insider trading? I mean, can you make money in this market without being a crook? I mean, is there any value in most anything that's traded anymore? And a lot of that is built into the way this system works. And you and I both know there's still millions and millions of dollars that are unclaimed from shorting airline stocks right prior to 9/11.
Oh, yeah.
Connected to Deutsche Bank.
And no investigation of that, right?
Never.
As we pointed out, they're not going to do an investigation. If they caught somebody, the Department of Justice, and this insider trading about all the war news and everything, if they caught somebody, good and well that the Trump Department of Justice is not going to prosecute them. And if by some chance some future administration decide they want to prosecute them, Trump will probably pardon the guilty parties in advance, so that won't happen. So yeah, why not do that, right? They can get away with it. It's just money that's free to take.
Well, he's turned this whole planet into a casino. And if you reverse engineer the price of gold right now, I mean, I think under normal conditions, it wouldn't be near this price. We would have not hit $5,000 an ounce gold in 2025 without this presidency. Mm-hmm. It's not going to happen. And I mean, we go back to 2024, gold hit $2,500 an ounce in August. I remember distinctly, and I've traced that price and everything that's happened since then. And it's all about the uncertainty. There is no direction. It's just chaos. And then the tariffs that never happened, caused that whole domino effect of all these bullion houses and banks overseas to start frantically repatriating. And that caused a cascade of failed contracts for all that physical bullion. So a lot of the paper market was exposed there. So this is only the beginning, I think, of the repricing of all commodities, not just gold and silver, but everything based in dollars. And I think this is just, we're reaching a point of no return where it's hard to even associate the dollar with the price anymore.
Yeah.
I mean, I don't know. I don't know that we can do that, David. I don't know if we can. You go back to the Jeopardy winner. I mean, a lot of people have done the math from 1964, if you were getting minimum wage in 1964 and you were getting paid, in silver quarters, you've got 60, $70 worth of purchasing power or more at that time with minimum wage. So that's the difference between earnings when you have a sound dollar, when you have something backed by gold or silver, and when you have a free floating currency. And you can get caught up in the numbers, like, well, the numbers are higher, I made more money. Well, you actually didn't, because the money's been devalued, or your currency's been devalued. So I think this is the the fight between oil and gold, which isn't really a fight, but I think the restructuring and repricing is going to go back and forth for a while now, based off of everything that's happened with the closing of the strait.
Yeah, and when you look at this, we're about, I guess, we're 2.5 months into this thing now, and the OPEC oil embargo was 5 months long. And what happened with that was it quadrupled the price of oil, and it never went back down again. And as you point out, this is what they're doing in terms of trying to push us into this controlled society. I talked yesterday, I think it was, Tony, about somebody who was in New Zealand. And New Zealand has come up with a 5-tier rationing system based on your value to the people in government. And guess what? The government is the number one. They're the top feeder. Okay. After them are big businesses, and then after them is infrastructure. Then small businesses come in at number 4, and the consumer is dead last. And this kind of rationing, the person looked at this and said, this is the same kind of contempt for small businesses and consumers, and this merger of the elites, of the big corporations and government that we saw throughout COVID. Looks exactly like that. And they just keep coming back to the same thing. Again, they'll have different MacGuffins, but it's always going back to the same thing. They want a permission society. They want total surveillance. That's why I like physical gold. They want total surveillance, total tracking of everything, and to make all of us poor, so they keep all of the money. That's really what is behind all of this stuff.
You're right, and I think the rest of the planet is picking up a bit on this, and the targeting of small business, the targeting of cash, the targeting of anything outside of the digital system. And I think for the first time in a long time, Canada just ran a trade surplus. You know why? It's because 24% of the output was precious metals exports.
Yeah.
Like, they ran a trade surplus in a
Yeah.
free. This is like United States and Canada, I believe, since NAFTA, have run trade deficits. And so Canada picking up a trade surplus because of the exported precious metals. As a matter of fact,
So Yukon Cornelius is getting into an export business then?
they're in the export. Well, and the gold is going, in a lot of places, going eastward, and looking at places like India. As a matter of fact, the premiums, because they're so bottlenecked from imports into India, premiums have skyrocketed for physical, because of customs and sorting through everything that's still waiting to be delivered. There's so much demand for physical gold and silver in India. It's literally like breaking the price, we associate with the spot price and a little bit of premium here in the United States. But in India, it's off the charts. And they've repatriated 77% of their gold holdings so far. And a lot of the countries are doing it. I mean, countries all over the world are doing the same thing. They're repatriating the physical. And that's what you have to remember. It's the new structure is based off physical because of the lack of trust. You used to just trust the dollar. The dollar's no longer trusted. It was weaponized. And so they're literally building physical storage facilities across the world to trade in and out of gold.
Yeah.
Hong Kong's doing that. I've talked about that before. I think that's a major move of storage facilities just off the airport outside of Hong Kong for international trade. And that's what the trade's going to be conducted in dollars. And I think we're seeing that right now with the price of gold falling when the price of oil increases, because it's liquidity out the door, and there's a lot of sell off in gold to buy crude. I think this is flip flop, but on the long enough timeline, I think the increase in gold is inevitable. I mean, I don't think it's going to eat into everything that gold does as far as price moves. But that's what's happening. Gold's functioning as money right now.
Yeah, that's right. And for those reasons, you see some of the banks as they're looking at predicting the price of gold. You got Bank of America is predicting 6,000 by the end of the year. You got Morgan Stanley that is seeing $5,200 gold by the end of the year. They have been in the past very conservative about what they had put in. So these are the people who are looking at long-term trends that are predicting this kind of stuff, and their long-term trends have historically been very conservative. But the bottom line is, we point out every week, and as other people have been pointing out, all the fundamentals that drove gold up so much in the last couple of years are not only still there, but they're much stronger than they were before.
That's exactly right, and they're only getting stronger because we have no certainty. And you have to ask yourself, what is the plan here? Like a lot of people are applauding Trump for the supposed reopening of the strait. Well, you closed it in the first place. I mean, it's not an accomplishment. I mean, this anybody that knew anything about geopolitics, and I've told this story on my show. I mean, my dad was talking to me about consequences of striking Iran in the 90s. I was a kid, I was a teenager, and he was talking to me. He was like, "Well, they would close the Strait of Hormuz." I remember that, in 1997. And I was thinking, well, this is what's always been understood that was going to happen if you make that sort of strike. And of course, we did. That happened. So it seems to me that was already known. And if you wanted to, oil had been stagnant for so long, in the 50, $60 range. So I don't think we're going to get back to that level. I think it's been repriced, just like the OPEC embargo. And once there's a repricing, does it come down? I mean, it's historically, have we ever seen that where there's a return to, a cheap oil? I still don't see it right now.
No, it was like $3 a barrel, and then it went to $12 a barrel, a factor of 4, and it just keeps going up from there, doesn't it? And of course, as you point out, everybody knew that was going to happen with the Strait of Hormuz, including the people who were in Trump's inner circle, but they didn't have the spine to stand up and say that to him. And when he pushed back a little bit, they just sat back down again and said, "Okay, fine, we'll let you do it," or let you do it. He's going to do it, whatever he wants to do.
These are World Economic Forum sympathizing folks. These are globalist people. And as I heard a report the other day, I thought was really interesting. We haven't really dug into the new Fed chair. We haven't really dug into Warsh. It hasn't come out in the Warsh yet. I know you made that joke, but it is interesting that his father is a major donor, like a billionaire donor, and then he's also had I think allegedly been on the Epstein guest list. There's other stuff that's been associated with him. And
well, look, it's Bessent. Scott Bessent was Soros's right-hand man when they broke the Bank of England. And if it was a Democrat that had put in a Soros guy as Treasury Secretary, you can imagine everybody would be having a fit. But when Trump does it, it's okay. I'm sure this guy has seen the light, and he's no longer like that at all, right? And so, of course, this Warsh guy, like I said, I haven't done a deep dive on his background. All I know about him is that his wife is coming from this Estee Lauder makeup fortune. And I said, yeah, they're trying to put lipstick on the pig of the Federal Reserve. That's what they're doing with this thing. But
it's interesting. There's chaos inside the Federal Reserve now. And, Jerome Powell's decided not to leave. He's going to stay. He's got a seat there on the board. He's a Fed governor. And he's going to stay until I think August of 2028. So he decided not to leave entirely. So his vote counts, I guess, if you think that works like a democracy. But I mean, there's some dissent in there. It's not just all about, there's some people that want rate hikes. There's people that want to stay where they are. And there's people like, I think, again, the policy of Trump is a weaker dollar. They need to have that big print. And so that's rate, not just quantitative easing, as you've mentioned a couple of days ago. You're talking about they're already doing quantitative easing. They're already doing QE.
Yeah,
but the other side of that is the lowering of interest rates, which is going to massively expand the money supply. And that's the goal of the Trump administration. It has been. That's just a clear policy that they've made. We want a weaker dollar.
He's not
And you
going to
get
do
that.
anything to try to stop the budget deficit. I mean, again, the trade deficit is his obsession. You never hear him or Mike Johnson or any of these people talk about the budget deficit. Only Thomas Massey talks about that. And he tries to draw as much attention to it as possible. The freshman congressman who came in, he handed them his lapel thing that counts up the what the deficit is. But nobody else cares about that. And so Trump's concern is to make sure that he can just pay the interest on this thing. And that's why he wants the interest rates lowered, because it makes a huge difference to the budget of the federal government. If interest rates go up much, I mean, it's going to suck up all the money that the federal government has just to pay the interest on the debt. So he's obsessed with getting that down, but he's not going to make the fundamental changes that need to be made, and neither is Congress.
In 1963, the debt to GDP ratio for the United States was 31%.
Mm.
It's 100% now.
Yeah.
And climbing. We've had higher. World War II is an exception. So a worldwide war, and you had over 100% debt to GDP, but the debt of the U.S. was like 268 billion or something. It was quaint. I mean, this is the numbers that we're dealing with now.
Mm-hmm.
And the fact that, this isn't going to be, there's not going to be a post-war boom. This isn't like the end of World War II. There's not a new Bretton Woods in our favor.
Mm-hmm.
And the lack of purchasing of treasuries and bonds and other things that prop up the dollar are on their way out. So the deficit, I know Dick Cheney said deficits don't matter. They absolutely do, because it has to do with the strength of the dollar, or the trust factor in the dollar, the money velocity. How much is it used? That's the reason we've been able to float as long as we have. And this is what we've been doing. We haven't been gaining wealth. We've been floating. Anybody that knows anything about business, especially I've been in the gasoline business, and contracts and float, and you can float for a while and it makes it look like you have money, but you really don't. You're losing. The more that you increase the deficit, the more you increase the money supply, the faster that you're going to go out of business. And that the United States will continue to print its way out. So what does that mean, David? It means that commodities will be repriced based off the loss of purchasing power in the dollar.
Yeah.
And that's just inevitable. So you don't have to be, it doesn't take special skills to figure out that, 2 years from now, gold and silver are going to look better than they do today. This isn't 1980.
That's right.
Right? There's no more room. The reason that they were able to bring down the prices of metals in 1980 at $800 an ounce for gold and $52 an ounce for silver is because there was still lots of room to manipulate the market. The debt was only about, a little over $1 trillion for the U.S. at that time.
Mm-hmm.
Well, now we're at 37, 38 trillion.
Yeah. Well, I think it's 39. I looked at it, and it's like the rate that it was going, supposed to be sometime in September. I think they're going to hit 40 trillion, unless Trump and Hegseth and these people can do things like boost the defense spending. The only thing they're complaining about is not the level of spending for defense. They're just complaining about the fact that the companies can't make the bombs fast enough that they're blowing up. This whole federal government is going to be hoisted by its own petard, blown up by its own bomb. When you look at it, I calculated what the Pentagon's budget, if they get their $1.5 trillion, again, they hit a record budget of $1 trillion, which is more than the next 8 countries combined that spend on defense, quote unquote defense. Although it's not defense, it's on offense is what we're using it for. But anyway, more than the next 8 countries combined. As soon as they hit that record, we need to increase that by another 50%. So what does it cost the average American household? I looked up the number of households in the U.S. It's over $11,000 per household that we're paying just for the Pentagon nonsense, just to create wars, to kill people, to create instability, global instability, and to put our own lives at risk, really, because we're creating a long list of enemies who would like to attack us, and they will find some way to do it.
Yeah, we're just out there looking for a war.
Yeah.
And that's built into this budget. As a matter of fact, the numbers you just quoted were true when it was 750 billion.
Mm-hmm. Mm-hmm.
That spending more than 8, what is it, the next 8 countries combined.
Yeah.
That was true. So we're going to double that.
I know. It's crazy.
That's the severity. And the damage that does to our monetary system when you just continue to create more and more liabilities, and then you create new currency to cover those liabilities. Does that end well? I mean, doesn't math eventually catches up. I don't think math cares about your intentions or your political philosophies or your ideology. Math just is, and it will eventually catch up with you. And
Even if
we're
you own
playing.
a casino, it'll catch up with you, doesn't it?
Yeah, well, that's casino strategy always favors the house. No
That's
matter
right.
I'll
Except
play
when it's
blackjack.
Trump's house. It's crazy. Speaking of his strategy and lack of it or whatever, lack of understanding, I think people say, well, is this deliberate sabotage or is it just stupidity? There was one aspect of this, I think, argues for the stupidity side of it. When he starts pulling in troops from Germany, and look, I'm all for that. I don't want to see an American empire, but he does. He does want to see an American empire. And the troops in Germany are not there to protect Germany as much as they are to project American power throughout Europe, throughout the Middle East, and other places like that. And so when he pulls the troops from Germany as a protest against Germany, what he's really doing is undermining his own dreams of empire. That's why I'm saying none of this stuff makes any sense. Even if you look at it from his perspective, it doesn't make any sense.
I go back to his first administration, and this is which is completely different, and that. I mean, there was even a semblance of we don't want this liberal new world order. I remember there was that story that I read on my show back in 2019 where he was pulled into a side office with General Mattis and a few other of the Joint Chiefs and other people that were trying to explain to him the rationality why we have troops in Germany and why we have troops, in the Pacific realm and all this that he was talking about bringing back. Like these treaties aren't, this is something that he voiced, that NATO was obsolete and it costs them too much money. They're not paying their fair share. We should bring people home. You don't really hear that much. This is a protest. I think it's personal, or with the Germans, but he's
Mm-hmm.
not. He's not going to reallocate those troops to the United States. He's
No,
not going to
no.
protect our southern border or do something that would be for the national security of Americans. It's going to still protect the empire. They'll be reallocated somewhere else, probably redirected, as you mentioned, to the Middle East, which
Mm-hmm.
is
Mm-hmm.
our focus always because of our friends there on Capitol Hill with APAC.
Oh, yeah, absolutely. I got a question here for you, Tony. This is from Hatchcar61. Has Tony heard about two major silver refiners buying silver directly from miners? Seems there's a glut of 90% silver. Wonder if this is why. What do you know about that?
Uh,
Have you heard about that?
there's a lot happening. I haven't heard that direct story, but I know that there are some miners that are connecting with the refiners and being able to put out new, physical bullion retail. So I do know that's happening. One of the unfortunate consequences of the price of silver going parabolic and going up to $126 an ounce
Mm-hmm.
90 days ago or 120 days ago was the refiners got overwhelmed. And as a matter of fact, I had to hold on to sterling that I bought. Sterling silver was the last thing that I was still buying it, even if I couldn't melt it. And finally, I had to give up buying sterling for a little while. I'm buying it again because there was so few refiners that would even take silver at all.
Mm-hmm.
So I think they finally caught up and the price stabilized a bit. There's going to be silver is back online as a monetary metal. As a matter of fact, it was just something I was talking about the other day. A lot of people, because they tried to sell, were really frustrated with silver because they couldn't get, close to spot quickly when the price hit over $100 an ounce. It's because everybody was trying to sell at once. I think a lot of those systems have been worked out, and so as silver continues to become more and more, not just an industrial metal, not just something used for medical and other things, but as a monetary metal again. A lot of those refining outlets and wholesalers and other things are I think, a lot better equipped in the next year to two to deal with the influx of people using it to liquidate in and out of the market.
Mm-hmm. Mm-hmm. And you're not seeing that with gold in terms of, because of all the industrial uses of silver, I guess. You're not seeing that as much with gold. I mean, there are industrial uses of gold, but not as much as with silver. And a lot of people have looked at this and said, there's that new design for a battery. I forget who did it. Maybe it was Hyundai or something. But instead of using lithium, they had a design for silver, which had a lot of advantages over lithium in terms of not being as volatile for a fire. It had, I think, a lot faster charging rates and things like that. But of course, it was a lot more expensive. But people said if they start to move in this direction, that's going to be a massive use of silver. So that's the other part of the equation, I guess, with silver.
Yeah, silver is the most thermoconductive metal on Earth, and so it's used in solar and batteries and other things. It will continue to, I think, be a mainstay for its industrial use. And the point I was trying to make with the gold, or the golden versus silver on refining, is because gold has been a monetary contract. A lot of times when I sell to a refiner, that gold has been pre-sold. So I'd sell to the refiner, it's been pre-sold. It's going to go up the chain to probably a central bank or a large buyer. And those contracts will get snatched up because that's what central banks do. I see a movement in the future where they're also using silver. We noted in the last few years, Russia put silver as a strategic reserve asset. India added it as an asset where you could borrow against it for home loans and other things and business loans. China's stockpiling silver. I think in the next 2 to 3 years, we're going to see silver used alongside gold as a storage of monetary use.
Mm-hmm.
So I think they'll be added to the balance sheets of not only multinationals, but also countries. And that will change the nature of how silver is, uh, bought and sold. So we weren't ready for the prices that hit in the last, 6 months. It was just the system wasn't ready, but I do believe with between miners, getting with refiners and wholesalers and trying to get physical product made, I think it will really increase the ability for everyday folks to get in and out of that market easy.
Well, that's great. Yeah, you weathered the storm that came through here. Now we're kind of in, I guess, the eye of the storm. I think there's another wave that's going to be hitting us in the future. Maybe not like you point out, maybe people have learned some things that might help to mitigate that. But I think it's going to pick back up again. I think that everything that Trump is doing is really hurting us economically. It's we can all see it in what has happened to our lifestyle, and but I think it's going to pick up again, and I think it's a good hedge that we all need to have as individuals. What is happening at Wise Wealth that you can tell us about?
Well, we're still recovering from all of that. I mean, it's funny because yesterday I had my crew, my ladies here in Branson. I said, let's go through. We had all the stuff in the cabinets, and a lot of that stuff I, paid over $100 for. There was things that I said, let's just liquidate all that we can. And we went through a lot of stuff that I can't put into Wolfpack, and it was an all day project yesterday, but I just got rid of that stuff, and I said, let's put this on the balance sheets because we need to be able to buy more product. And I was able to pass on yesterday. If you're a Wolfpack member, you get silver dollars or something that we've been putting in most all of the packages. So the stuff that was made prior to 1935, so Morgan dollars and peace dollars, a lot of them are collectibles. We pass those collectibles on to people because we don't have time to sort through them. So a lot of times you get way more than the silver value. So just looking for little things like that. We know that there's, even with the prices and things have calmed down, I'm always vigilant on actually getting supply. I think that it's so volatile, David. I mean, right now. I mean, you can get stuff, but it's never really fully recovered from 2020. This isn't the same world when I started my business. It's not the same sort of supply chain. So I'm always looking at creative ways to do that, and it's surviving the price fluctuations, and I'm glad that we did. I don't. It's not over. It's not over at all.
It's the eye of the storm. That's right.
You're exactly right. We're in the eye of the storm.
Yeah, and so just to clarify, when you're talking about that, putting in some of those older coins, you're putting in those coins at the valuing them at their weight in terms of their value as just the weight of silver, not putting in a premium for the numismatic stuff. So that's what you're talking about. People might
That's exactly right.
Yeah, might actually get more from that. Well, it's great. I love what you do, and especially the Wolfpack thing is very unique. And again, people can buy in any quantity. They can put in a large order. They can set things up for their IRA, and you work with companies in terms of people using setting this up as an IRA. You don't actually manage the storage, but you work with companies that do, and so people can set up a metal, gold, and silver IRA, and that's always a very useful thing to do as well.
Always physical too. Like we don't deal in paper. None of what my business conducts is done in paper. It's all physical metals, and I think the IRAs are, I think, a great way to hedge against having your savings in the market. Like we talked about earlier in the show, just the insider trading. Like, do you trust these people? Like, what is the valuations of these companies anymore? I mean, is it based off profit? Is it based off earnings? I don't know, but there's going to be the manipulation in the paper and the standard market. I think.
And to clarify what you're talking about, you're really talking about when we say paper gold and paper silver, we're talking about ETFs and things that you can trade on Wall Street, like GLD and SLV, that type of thing. That's what we're talking about with paper. You do have, and I think they're great, the silver and gold certificates. I like that a lot. As part of the Wolfpack that goes out from time to time.
The gold back. Those are great.
Yeah, that's good. And that's not paper. That's actual physical gold and physical silver that is woven into this thing that looks like a paper note that is there. So yeah, it's great to have that option for people, and it's one of the few things that we can do to prepare against these types of things that we see happening out there. Your program's coming up right after this one today, is that correct?
Yes, sir. The Arterburn radio transmission will be live here at 11 a.m. Central Time, and you can find me over on Rumble on the America Unplugged channel or on my X account at Tony Arterburn.
That's great. That's great. Yeah, and we had you were traveling last week, and you had the show goes on even when you're traveling. You had guest host and.
Thanks to Jason Barker. Yeah,
that's right.
Really, I didn't. This was one of my goals this year. It's like I need to not have a show that's a best of. It's only one show. I used to do 5 shows a week, but I can't anymore. It's just too much. So the Thursday, I always look forward to it. And Jason and Ashley did a great job showing up and helping me keep that stream live. So thanks to them.
That's great. That's great. Well, again, everybody can catch Tony's show right after this one ends. And thank you so much for joining us, Tony. Thank you for what you do. Thank you for supporting the program. We really do appreciate it. You have been a key supporter for this program.
Real quickly before we go, AP Rumbleseat just dropped a comment and said, does Tony also have a blog to help educate people on his site?
Working on it. We've got a new the website for Wolfpack is being redesigned, and we're continually to make updates on that. And the podcast, I'm going to bring back the Wise Wolf Gold and Crypto show, and that is coming soon within the next month or two, and we'll have that in along with some blog posts and other things that we'll talk about some really talk about just gold, silver content and the education part. I'm going to start doing that again.
That's great. That's great. Well, thank you so much, Tony. Appreciate you coming on. And always very interesting to talk to you. Always have a wealth of information and a way for people to build their wealth as well. Thank you so much. Tony Arterburn at Wise Wolf Gold. And of course, you can get there through davidknight.gold.